Welcome to the first module of our investment journey. Today, we are going to demystify the stock market. By the end of this session, you will be able to explain what the stock market is, understand how to open your own investment accounts, and distinguish between the major stock exchanges. We have three clear goals for this scene. First, defining the market. Second, understanding the tools you need to trade. And third, comparing the big exchanges like the NSE and BSE. Now, let's address the big question. What exactly is the stock market? At its core, the stock market is a marketplace where ownership in a company is bought and sold. Imagine a company like HDFC Bank wants to expand. They need capital to build new branches or develop better apps. Instead of just taking a loan, they can sell small portions of ownership in the company to the public. These portions are called shares. When you buy a share, you become a part owner, or a shareholder. The stock market is the platform that brings these companies and investors together. It is not just about gambling or numbers on a screen. It is about providing businesses with the fuel to grow while giving you, the investor, a chance to share in their profits over time. Why do people do this? Primarily for wealth creation. If the company grows, the value of your share increases, and you might also receive a portion of the profits called dividends. To start investing, you can't just walk into a bank and ask for a stock. You need two specific types of accounts that work together. First is the trading account. Think of this as your transaction hub. This is where you place your orders. When you decide to buy a share of HDFC Bank, you use your trading account to execute that instruction. Second is the Demat account, which is short for dematerialized. In the old days, shares were physical paper certificates. Today, they are electronic. The Demat account acts like a digital locker or a bank account, but instead of holding cash, it holds your shares safely. The flow is simple. You move money from your bank to your trading account, buy the stock, and then those shares are stored in your Demat account. If you are looking for a seamless way to get started, I highly recommend using Dhan. It's a fast, user-friendly platform for both beginners and pros. You can use the referral code EJZZI96380 to open your account today and join the community. Now that you have your accounts ready, where do you actually go to buy these shares? This is where the stock exchanges come in. Think of an exchange like a highly regulated supermarket where stocks are listed for sale. In India, we have two primary giants. First, the National Stock Exchange, or NSE. It is the leading stock exchange in India, known for being fully automated and having high trading volumes. Its benchmark index, which tells us how the market is doing, is called the Nifty 50. Next, we have the Bombay Stock Exchange, or BSE. Established in 1875, it is the oldest stock exchange in Asia. Its famous benchmark index is the Sensex. Is there a big difference for you as a beginner? Not really. Most major companies like HDFC Bank are listed on both. The price might vary by a few pays between the two, but you can choose to buy from either. The NSE is often preferred by active traders because there is more activity, while the BSE lists a larger total number of companies. To make this concrete, let's look at a real-world example. HDFC Bank. When you look up HDFC Bank on your trading platform, you aren't just looking at a ticker symbol. You're looking at a massive financial institution. HDFC Bank is one of India's largest private sector banks. When you buy one stock or share of HDFC Bank, you are buying a tiny percentage of every branch, every loan they've issued, and every profit they earn. The price you see on the NSE or BSE fluctuates every second. If the bank reports high profits or the Indian economy grows, more people want to own the stock, and the price goes up. If there is bad news, the price might go down. Investors often choose stocks like HDFC Bank because they are considered blue-chip stocks, companies that are large, well-established, and financially sound. For a beginner, starting with companies you recognize in your daily life makes the concept of ownership much easier to grasp. Remember, as a shareholder, you are a partner in their success. If they pay a dividend of, say, 5 rupees per share and you own 10 shares, you get 50 rupees deposited right into your linked bank account. Let's take a moment to understand how you actually profit from a stock like HDFC Bank. There are two main ways your money grows. There are two primary methods: capital appreciation and dividends. First, there is capital appreciation. Imagine you buy one share of HDFC Bank at 1500 rupees. If you hold that share for a few years and the bank performs well, the market price might rise to 2000 rupees. If you sell it then, you have made a profit of 500 rupees. This is the most common way investors build wealth. Second, we have dividends. Think of this as a thank you payment from the company. When HDFC Bank makes a large profit, they might decide to distribute some of that cash to their shareholders. Even if you don't sell your stock, you receive this cash directly. When you combine both, you get your total return. This is why investing is different from just saving money in a cupboard. Your money is actively working in a business that is trying to grow every single day. Take a moment to look around you. The phone you use, the car you drive, or the bank you visit. Most of these are companies whose shares you can own. Before we move on, let's address a common concern for beginners. Is the stock market a gamble? Understanding this is crucial for your long-term success. In gambling, the odds are generally stacked against you, and it is a zero-sum game. In the stock market, you are investing in the economy's growth. Gambling is based on pure chance, while investing is based on business performance. When you buy a stock, you are betting on the ingenuity of thousands of employees at a company like HDFC Bank. You are betting that people will continue to need loans, credit cards, and savings accounts. Risk management involves research, diversification, and maintaining a long-term horizon. The risk comes from uncertainty. Prices can go down in the short term due to global news or temporary setbacks. However, history shows that great companies tend to recover and grow over the long term. It is vital to remember that volatility is not a loss unless you sell. By doing your research and not panicking when the screen turns red, you transition from a gambler to an investor. Why might a company's stock price fall even if the company is doing well? Think about that for a second. Sometimes the whole market drops because of external factors like a rise in oil prices or global political tension. This often creates a sale for smart investors. Now, let's walk through the actual step-by-step process of getting started. You know the theory, so let's look at the execution. To open your accounts, you generally need three things: your PAN card, your Aadhaar card linked to your mobile number for OTP verification, and your bank account details. As I mentioned earlier, choosing a broker is your first step. Using a platform like Dhan makes this process digital and paperless. By using the referral code EJZZI96380, you can initiate the process right from your smartphone. You'll upload your documents, take a quick selfie for verification, and digitally sign the forms. Once you submit, the exchange and the depositories verify your details. This usually takes 24 to 48 hours. Once active, you don't need lakhs of rupees to start. You can buy just one single share of a company to see how the system works. For example, if you bought one share of HDFC Bank, you would see it appear in your holdings the next day. This hands-on experience is the best way to learn. Even before you put in money, just looking at the live prices of NSE and BSE will make the market feel much more real to you. To wrap up this first module, let's recap what we've covered to ensure you've met our learning objectives. We started by defining the stock market as an engine for business growth and wealth creation. We cleared up the confusion between Demat and trading accounts. Remember, one is your wallet, the other is your locker. We looked at the two giant exchanges in India and realized that while they have different names, they serve the same purpose for you as an investor. Your homework is simple. Think of one company whose products you use today. Is it listed on the NSE or BSE? Use your new Dhan account, opened with code EJZZI96380, to look up its current price. You have successfully completed the first step of your investment journey. In the next module, we will dive deeper into how to actually pick the right stocks and read the data on your screen. I'll see you there.